Investors on the Nigerian Stock Exchange Limited suffered 150 billion naira loss last week as bears dominated trading, halting consecutive weeks of upward movement. The dip was attributed to sell-offs and profit-taking in high-price and blue-chip stocks. The market sentiment was also attributed to investors adopting a cautious approach as they analyzed the recently released inflation figure of 24.08% and its potential impact. The NGX All Share Index dipped by 0.93% at the close of trading last week to 64,721.09, while the market's capitalization dropped by 0.40% to 35.422 trillion naira. To talk to us on this, we have Kasimu Garba Kurfi, is the CEO, APT Securities and Funds. Thank you so much for joining us on the show.
Okay, thank you for having me. What we realized last week is...
Okay, so Kasimu, I'm going to throw the question so that we can have it in proper perspective and have a direction, because, of course, that's what we're hoping to achieve on the show this morning. Now, let me start by saying that the Nigerian Stock Exchange had been showing signs of resilience and growth. As of January this year, investors smiled away with about 154 billion naira. 8 months down the line, it has actually lost about 150 billion naira. So what are the factors responsible for this turn of events?
Well, the truth of the matter that is the profit taking. Remember that a lot of the investors have gained tremendously because in the last 2 months from the coming of this regime, the market gained over 5 trillion. So part of it, some of the investors started taking their profit. And then forget that most of the schools are likely going to resume. So most of the middle class, they need money to pay for the school fee. So they have no choice than to sell their stock. And when there is too much pressure for the seller side, then the demand would go down, and that would declare to the 150 billion lost. But we believe this is a mile if you compare to the gain of 5 trillion in the just last 2 months.
Now, which sectors or industries would you say were particularly affected by this loss? And how did investor sentiment change throughout the week as the losses accumulated?
Well, one of the major sectors that have got tremendous loss in the banking sector, because a lot of the activity in the financial sectors were different. If you look at it, even last week we had a transaction of over 4 billion by the First Bank. But remember, the First Bank was trading as high as 22 naira, but it closed 18 naira to 19 naira last week. The same apply with Fidelity and many other banks that their price go a bit down. However, since those banks that declare interim dividend have not yet declared their half-year result, we're expecting their result to come out this week. Stock like GT, Zenith, Assets, UBA. And if they come with a good result, that will rebound the market and likely to recover whatever might have lost in the last week.
Have there been any historical instances of such significant losses in the Nigerian stock market? Because when you look at 150 billion naira being lost, that's a huge loss by some measure. And is this a fluctuation in the market, or we expect this particular kind of negative trend to continue in this week, of course, and in the coming weeks?
Well, if you remember last week, we had some of the markdown for some of the stock, and that also counts as a loss because it is marked down for the dividend, and that affected some stock like setback was marked down last week, and also we have some markdown on the Boa Smith and Boa Food. However, the Boa Food gained last week, and that also makes some recovery from what was marked down for the dividend. But all in all, what we are saying that except the penny stock that tremendously lost heavily, those that have gained tremendously, because we are talking of stock like MTN Cocoa, which was trading at 4 naira and today is trading at 2 naira 20 kobo. We have many other of the penny stock that have come a bit down, but this is not unusual because they go up and come down without any serious fundamental. They just follow the market effect or bandwagon effect. And those penny stock, quite a number of them have lost tremendously. But those is nothing to worry about because even if they lost 50% of their market value, it has no much significant value compared to the big stock like Dangote Cement, like Boa Cement, Boa, and Airtel and MTL. If any of these lost even 5%, the market will shake because their loss of 5% can be over 300 to 400 billion lost by a single stock in a market.
If you were to scale it up a bit, Kasimo, were there any external factors such as probably global economic events that could have contributed to this loss, or this volatile situation is peculiar to Nigerian stocks at this time?
There wasn't much except that of the markdown, because most of the foreign investors have left our market since COVID period. So they were all stay and wait. But now with the single exchange rate, we are expecting they are coming. And when you look at our average daily turnover now, we are talking of 6 to 10 billion. It shows that probably the foreign investors have started coming, because there must be a fresh fund for the market to have this. Priority to this, our turnover is 2 to 3 billion. Now, even last week, our average turnover is about 6 billion. And this week, we are even doing much better. So it shows that there is incoming fresh fund, either by the foreign investors or institutional investors or both. But remember, the inflation is already 24%. And therefore, you find it very difficult to invest in any financial instrument to hedge you against inflation except equity. Because in most of this equity, they gain 50-40% within the period of 2 months. So if there is any alternative investment that you can hedge against the inflation, equity is number one. And therefore, we are not surprised to see the volume of our turnover is moving between 6 to 9 billion, showing that more fresh funds are coming into the market.
Inflation figures are rising, Kasumo, and earlier on you said that investors should not be worried. But then when we begin to have a high volume of sell-offs and profit taking in stocks, doesn't that signal a major concern or the possibility of investors clearing out investments over a looming danger that probably might not be what we are seeing, but then could be operating under the underlying factors and, of course, what obtains in the stock market that might not be visible for others to see?
Well, when you look at most of our stock trading in the Nigerian exchange, they are traded below the fair value. We are talking a PE ratio of 5.6. You will never get it in any emerging market or any advanced market. Most of the PE ratio, you are talking of 10, 12, 15. But we are talking of PE ratio of less than 10. So you can say that there is nothing to care about. And don't forget that today, in the Nigerian exchange market, quite a number of stocks are paying you a double-digit dividend yield. This you hardly get in any other market. A dividend yield of 10, 11, 12% is not feasible in the other exchange, but it is here available. It shows you that our stocks are trading below the fair value. So nothing to fear much.
All right, to finalize this or to end the discussion, Kasimo, are there any indications of how individual retail investors versus institutional investors might be impacted or were impacted by this market downturn?
Yes. If you look at it, before the market started to bounce back, our turnover go as low as 2 to 3 billion. It shows you that most of the institutional investors decided to stay away. We are only dealing with the retail who cannot move the market anywhere. Now we have seen volumes. It shows you some of the institutional investors are strategically taking position. Not only that one, even some companies have declared their interest to come to the market. And remember that of Fidelity Bank, First Bank, and name them. And all this shows you that there is more confidence in the market, and they believe that the market is the right time to come and source for additional funds. And when you get such, it shows you that the market just started the rally. Because by the time they close their offer, you will see them in the price that higher than where they were before. And because of this, we still have the confidence that there is less much to fear for this market as more companies are coming through the primary market aside the secondary market transaction that is going on.
Well, just as you have allayed the fears of investors, let's hope that they will be able to replug their finance into the Nigerian stock market. Thank you so much, Akasimu Garba Kofi, CEO, APT Securities and Funds. Thank you so much on the show.
So thank you for having me.